Welcome to another episode of Derivatives Decoded. Today, I'm very excited to share a conversation with Martin Leinweber, who's joining us from MarketVector. Martin, thank you for joining. I'd love for you to give us a little bit of an introduction of what you guys do and specifically how you found yourself in this position.
Thank you for having me, and it's a pleasure being on this podcast. So I'm coming from classic TradFi, from the dark side of finance. So I was a classic bond portfolio manager trading global credits. I remember trading short-term credit at negative yields in Europe. That was a crazy time, and I knew something was wrong. And now it seems that bonds are not a safe haven anymore, right? So the US is maybe losing control over the long end, and everybody asks for a store of value now and a reserve asset, which we might have now with Bitcoin. And so I always had a personal interest in new assets. So I stumbled along Bitcoin in 2017, 18. And so I wrote a book with a friend of mine in German about asset allocation with crypto assets. And then, the problem is if you are in this new asset class, it's really difficult to stay in your old TradFi job. And so luckily I had the opportunity to join MarketVector Indexes and now running our digital asset research and strategy and combining my TradFi experience now with digital assets. And at MarketVector also wrote the second book, Mastering Crypto Assets, in English for the global audience to help institutional investors understanding this new asset class, right? And now I'm working with a lot of institutional investors on the ETF side, a cryptocurrency exchange side, developing new indexes for single token, but also more sophisticated strategies where we can talk about maybe later.
Absolutely. No, I think this is great. You kind of follow almost like the same exact formula for every single guest that we've had on this podcast, right? Strong conviction into the ecosystem, a long career in TradFi, and then trying to essentially, come in and pave the road, right, for what we believe is like the next iteration of how people are going to be trading value altogether. So I guess, I'll quickly jump into it because I think it's you fall in a very unique sort of sector, right, of building foundational data models, right, for the entire sort of space. But I think a lot of our audience would love to kind of learn more from your point of view. What exactly is a crypto index, right? Because I know you guys, a lot of your focus is on that. Maybe explain, right, as simple as possible, what is an index and why is a crypto index even needed? And is there any difference between a traditional index, right, on top of equities compared to what we're building here in crypto?
No, it's a valid question because sometimes in our client meetings, I get asked, how do you trade the crypto stuff, right? And I always say, hey, we don't trade that, right? We are just a data provider. Yeah, you have to trade it. You have to do the product. So we are a data provider, and you can imagine an index is nothing else than a virtual basket, if it's a basket solution, or a price, a reference price for an underlying and financial instrument. Generally speaking, crypto indexes work pretty similarly to other assets indexes. But of course, the problem you have in crypto is, and you know it, how fragmented the market is. There is no, let's take Bitcoin. What's the price of Bitcoin? You can look at Coinbase, you can look at Binance, you can look at Bybit. There are hundreds of exchanges.
Yes.
There is no primary listing exchange as in the stock world, right? So Apple is listed on NASDAQ, right? And that's your reference price, for example. And if you are at least operating in my space, where a lot of people are concerned with heavily regulated products, think of the ETFs, or also the derivative space is developing towards that. Whenever you need a settlement price, you have to settle your net asset value of your ETF or your derivative. You need a reliable checkpoint. And that's where the index comes in. So for Bitcoin, for example, which is a very important product in the US for the Bitcoin ETFs, but also for the options on the ETFs, right? We aggregate different pricing sources. So you have to be able to vet the exchanges, right? So you just take the best exchanges, If you look at KYC, AML, the volumes, are there any security issues, etc. Yeah, all these things, like a rating for a stock, for example, there are exchange ratings. Yeah, so you just take the best exchanges, and then you have an algorithm to come up with a representative price. Yeah, so that can be very complex sometimes, can be easier, right? Normally you are have a mix of a TWAP or a VWAP, right? And that's what we do. And then starting from the single coin indexes, we also work on strategies, right? We work on sectors, we work on different baskets, etc. And so think of an index really as your price anchor, your strategy anchor, and then a portfolio manager can replicate it for different products. Yeah. So that's the indexing world.
Is there anything, I mean, specific about crypto that makes creating an index for it much harder than any other asset class?
So I would say, as I mentioned, there's no standard listing exchange. So you have to be able to vet exchanges. There's no standard pricing pair. Some clients just want to price against the US dollar, but that's not the case for all tokens. There are some tokens that are just priced against Tether. And then you can say every index is more or less a customized version for our client, because the client also comes with some restrictions. So for example, not every market maker can trade every coin, and also not every custodian can custody any coin. And so when we do a basket, for example, the universe shrinks according to restrictions the client has, or sometimes also the regulator has in Europe. Yeah, so not every coin is allowed. And that also, that restricts the index construction, the selection of the components pretty rapidly. And so you have to be able also to, what do you do if an exchange goes offline and it's a pricing source for your index? Yeah, you have to detect outlier in pricing. It still happens sometimes that there are flash crashes or that an exchange is offline, right? Yeah. So all these kind of things, which are maybe more settled in the TradFi world, is a little bit more complicated in crypto. And then it's very often the case in crypto, everybody wants to have everything real time, every second, 24/7. And so also the index has to tick real time, every second, 24/7. So that's also maybe a difference to the normal TradFi indexes. Yeah. So at the moment, it's really a lot of customization work, unless I just want to have an S&P 500, yeah, or give me the standard index X, Y, or Z. It's really every top 10 index for a client looks a little bit different according to their restrictions, to be honest.
Absolutely. No, and I think obviously, like, as someone who's pretty much in the space of, focus exclusively on just building infrastructure, right, for trading, I can imagine like the technology required to kind of make that work is quite extensive, right? There's no, not only is there no like sort of structure to the market itself and sort of like how do you actually access that data, but also the reality is like every single one of these venues has their own flavor of how they actually publish that data, the frequency of the data. Even something as simple as just connecting to their APIs can be a massive challenge for some of these venues, given how they were built in the first place. But I guess that brings me to my next question, right? To kind of understand a little bit further, with all this, the amount of potential data sources in the space, right? And obviously the natural inclination right away is when you're building an index for the space for the first time is sort of, all right, where's the liquidity? And who are the biggest exchanges, and like who are like the most established players, and let's kind of like grab data from there. How do you see that evolving over time, right? With consolidation happening across the board, right? So not only from an M&A perspective, but when you think about like all these, like, for example, Coinbase just bought their, right? It could be very soon we see like, a big exchange like buying another one. And at some point, maybe, the entirety of liquidity just exists on 2 or 3 crypto native like exchanges, and then liquidity goes to other TradFi venues. But then you also have the other side of that, flip coin, and it's just like, all right, DeFi. What about all those other protocols that are actually also providing, arguably even more accurate pricing because there's no human intervention in terms of like how that data is published? I know it's a lot of information, but
Yeah.
yeah.
No, it's a super interesting question. I think in the classic worlds where I think the centralized exchanges are also living right together with the normal exchanges, there will definitely be consolidation. And I mean, we talk about crypto exchanges, but if you're honest, they are brokers, broker dealers, right? So they also do the custody. Yeah, you trade there, they have subscription services, all that stuff. Yeah, it's not a classic exchange as we know that from the NYSE, yeah,
Yes.
or the Nasdaq. But I think there will be huge consolidation, and also you see TradFi players entering crypto, right? Or the neo brokers, the new fintechs. Yeah, Robinhood is very aggressive, and I think also successful. So, and you see the CME, CBO, yeah, they're also sniffing on digital assets, and in the case of CME, pretty successfully, right? So yeah, I think there you will see less exchanges. Also, when it comes to regulation, I think that will also force some consolidation, right? I mean, you can't forbid that somebody creates an exchange offshore, right? That happens every day. I mean, we have hundreds of exchanges, but there won't be any liquidity, right? The liquidity will be with regulated players, and that will consolidate. But having said that, we have the decentralized world, right? And nobody hinders you to create a liquidity pool and to fork a DEX, and then you suddenly have a new DEX, right?
Yeah.
But here also you have strong network effects, right? You can fork Uniswap, but will you be as successful as Uniswap? And do you have the liquidity of Uniswap? Probably not, right? And so there will also be a fight for the largest share. And then you have in DeFi the additional challenge on which chain will it take place, right? So
Yep.
will it be in the form of a layer 2 on Ethereum, what Uni chain is doing, or will it be Hyperliquid with their own layer 1? Will it happen on Solana, or will it be at the end of the day really Ethereum, the DeFi chain going forward, right? So at the moment, it's really, I can't foresee it in which direction it will go. Yeah, it's pretty early. But that's also why I love this shop and why it's so interesting, right? There's so many things happening. I told you I was a bond portfolio manager. I can't imagine doing this job anymore. It would really bore me out, right? So it's what maybe other people will stress in this environment. I find it really interesting, and so there will be consolidation. But I think it will take a while, definitely in the DeFi world, to fight this out. Yeah, who will win there?
But let's imagine like we have a time machine, right? And we can fast forward, let's say, a decade from today, and
Yeah,
let's assume that the world truly adopts like DeFi as the absolute path to exchanging value, right? Centralized venues become less and less relevant, and the idea of like being able to just globally access anything and trade anything anywhere at any given moment is purely driven by decentralized like platforms. How do you foresee the evolution of, your index, right? Or other providers that are also providing the same sort of level of access to that data, right? So, let's say Binance is no longer king in liquidity, and all of a sudden it's like, it's Hyperliquid, it's the UIDX, and it's all these different indexes. How you imagine an index living in a world where everything is just purely driven in a decentralized like ecosystem?
there's still a case for the index, as you have to have a neutral source for a settlement price, right?
Mhm.
And we have that already today. I mean, our top 5 exchanges, top 10 exchanges delivering the prices to our indexes, they look quite different to what we had a few years ago, right?
Mhm.
Of course, Coinbase is still there, Binance is still there, but FTX, for example, was also a very prominent price provider a few years ago. It's not anymore, right? For known reasons. But I think that won't change. So there will be still a need for an index. So the pricing source will be different. Maybe decentralized exchanges will have a higher weight, right? But I can also imagine a world where you just trade a tokenized index, right? And we already doing that, for example, with reserve.org. Yeah, a curator is replicating our index there on their platform. So it works almost like an ETF, but in a decentralized way. So of course, there will also be consolidation in that space. But the interesting work for me is if we are really moving to this decentralized world, and I think we will, that also everything will be digitized. And so you will have everything in your wallet. Yeah. So you have your music NFT, you have your Bitcoin, you have your tokenized coin based stock. Yeah. You have maybe a tokenized treasury, and that's all within your wallet. And for me, that just means that I have much more assets to play with, yeah, and to create interesting strategies out of this index. What is important for me moving to this new world is that my hope is that everything will be based on a public, permissionless blockchain, blockchains as the base layer. And then you can have your permissioned chains on top of that in form of layer twos or something else. But that's really important to me that we don't move into this world where already the base layer is permissioned, right? And then it's not DeFi. So that's really important that we fight for that. It seems that the US is moving in the right direction. And it seems that really also banks are now going to this permissionless thing.
Mm-hmm.
And so I think from the standards we have now that you need an index and you need third parties for custody and you need separate functionalities, I think that won't change because I think regulators just make sure that what's now working in the institutional world from a regulatory standpoint, I think they will just implement that in the DeFi world as well. Yeah. So it won't be the Wild West as some envision, right?
Yeah, I mean, hopefully, where it sounds like we're going towards a much more sort of structured world, right? Which what we all we've been hoping for. But I guess like in your seat and MarketVector's, are you seeing signals coming in from institutions and institutional sort of participants in the space looking for decentralized like index like products, right? Like are you seeing more sort of uptick in the interest of I'd rather have access to that index in a decentralized fashion rather than like, trust a specific like, party, right, to provide that same data for me?
So I think the larger asset managers trading regulated products in Europe, the ETP products, or also the ETF providers, they need an index, right? And they already request that. And I also think the less professional players realize that if I want to have a first grade institutional product, I need an index, a third party index. I can't calculate that on my own. But in terms of products, what I'm also very interested and excited about is the whole RWA narrative, right?
Yeah.
So when ACK, for example, launched their VBIL, their floating rate bond funds on several chains, right? Solana, Ethereum, Avalanche, and I think I forgot one additional one. And so that will also be a huge market for us then as an index. If you have more and more real world assets tokenized, you basically have the same stuff, what we do in the bond market and the stock market, etc., just transfer to or on chain. And so we see some momentum now, but of course it's still early. Yeah. So what I said with Reserve, with this decentralized ETF, yeah, they call it DTF, that's still pretty small and early. But we are in an exponential world. Ask me that again in 3 years, and I'm pretty sure it will be completely different, right?
Which makes a lot of sense, I guess. I mean, I'd love to learn more from you about like the Coin 50 sort of index. I know you guys have, this is one of your most like popular products and something that you guys have worked on quite aggressively. But maybe tell me more about what makes it different, and how do you envision sort of the evolution of the Coin 50 index with everything that we've been talking about?
Yeah, so we work a lot with Coinbase, and we are really proud that we can be the index administrator for them. So we not only do the Coin 50, we also do a lot of single token indexes for their futures exchange, which is CFTC regulated and pretty successful. So the Coin 50 index at the moment is used as the underlying for the perpetual swap on the international exchange. I think it's not allowed in the US yet. I think that will also change when you have your new bill, right? Market structure bill.
Yep.
But there's some positive momentum. So It's a top 50 basket with a 50 largest token by market cap of the Coinbase universe.
Mm-hmm.
And the good thing about this, Bitcoin has a weight of 50%, it's capped. So you have that as an anchor. But if you really want to capture the crypto market, and the idea was when we created this index with Coinbase, their intention was to have the S&P 500 in crypto. Now, it's too early to do a crypto 500. You know it, right? It's liquidity is very yeah. So top 50 is already, I would say, a challenging index from a liquidity perspective, but you can't do 500 token at the moment. It's also not worth doing it because I think we cover already with the top 50 almost 90% of the total crypto market cap, right?
Yeah.
Because the tail of altcoins is getting super small in weight, right?
Yes.
And so that was the intention, so that if you want to buy crypto, you want to sell it, yeah, you do it with the Coin 50 perp, similar to what you do in equities, where I just buy an E-mini future, S&P mini future, or sell it, right? And the good thing is it's a nice basis also for future sub-indexes, for example, right? Because as I mentioned, you can also slice and dice crypto in different sectors, right? And what I envision is that because at the moment, crypto is very single token heavy. Yeah, if you look at the ETF space, you have all these filings for single tokens, also in Europe. But gradually in Europe, for the ETP market, baskets or more tokens are already allowed.
Mm-hmm.
And we see more and more requests for these broader baskets, because for most of market participants, it's really a super great challenge to pick the right token. Maybe you can say Bitcoin is an easy bet, but now already a lot of people are struggling with Ethereum, right? Is it still worth buying Ethereum? Or is it Solana? Or should I skip Solana and buy Sui and all that stuff? And if I look at my own wallet, I have to be honest, I can't outperform our top 10 index. Yeah, so I'm open. You think you always know it better with the latest tip and the latest hot coin. But at the end of the day, a classic market cap weighted index in that space won't be the best trade ever, but it's also not the worst trade ever. And so we see some momentum now on the Coinbase International exchange with this Coin 50 perp. And my hope is that this will establish as a standard. And also my hope is that not only will we have the index for a perpetual swap, but maybe also for an ETF someday, right? But that depends really on how the regulation evolves in the US.
Do you foresee market sort of vector providing an index or a similar index to other derivatives products besides the perpetuals and the ETFs that you mentioned?
Yeah, so I think our aim is really here to set a standard, right? So that if you think of a broad basket, that this index can be traded globally, right? And different jurisdictions, yeah. But we are also aiming for that for other indexes, and also our clients are very eager to sell their products in different jurisdictions. Of course, with Coinbase also as a global player, they have very high ambitions when it comes to this Coin 50 index, right? But at the moment, it seems that we have to wait in the US at least a little. They move still slowly. And so XRP, Solana, something like that will be next. But maybe we get this market structure though this year, and then they go from this case-by-case decision to a quantitative rule, as we have in Europe, right? For example, in Germany, you can buy the top 100. You have some additional restrictions of how many approved token you need to have. For example, Bitcoin, Ethereum, a certain weight. But at least you can do some baskets, you can do some sectors, because think of it, who at the SEC shall evaluate a Pengu ETF, right? Or some other meme coin ETF, or they look at Sui and then an Aptos, and then somebody has to evaluate, is that a good chain or not? Can I do it? That doesn't make sense, right? And so you need some rules, quantifiable rules, where you say, okay, we open up the universe, and we lay it in the hand of the asset manager to do the risk assessment and all that stuff, right? And then you can do really nice products. And then I hope you see also more liquidity for the altcoin market and also for the derivative space. Yeah, that's my
Agreed.
hope.
No, agreed. I think a clear framework, right, is something that this market like is yearning for, right? Effectively, that's just going to open the gates for all the players to have a clear sort of playbook on how to actually engage, right? And once that happens, I think we'll start seeing a lot more products and a lot more players that are coming into the space anyways. Martin, I really enjoyed the conversation. I actually appreciate kind of your insights into where we kind of expect the world to move, especially as a data provider. Is there any other final remarks that you'd like to add to the audience?
I hope I made clear how important the index is when it comes to a reference price, right? And my hope is that a lot of players who still struggle with, do I need an index or not? Maybe they have now more motivations to think about their product again. But I think people just have to be open-minded in that space. Yeah, I'm still, when I talk to TradFi people, some people are still sorry that I work in crypto, yeah, and ask if I'm really doing well, right? And I do well, yeah. So we are still so early in that space. It's really always still focused on Bitcoin, and my mission is really, and I'm glad that I can be here in the podcast, really doing more education and open the eyes to the TradFi world that this is an important asset class, because we have to be honest, without the huge money allocators, we can't get to the next step. And that's still a lot of work, believe me. Yeah, when you talk to pension allocators, insurance companies, and all these kind of people, right?
So there's quite a lot, to share with people, right, in order for them to get educated and kind of feel comfortable. But I think, your insights and your views is exactly what we need to start sharing around. Martin, thank you so much.
Thank you very much.
I appreciate it.
Thank you.
I appreciate it.
Thank you.